Sam Zell, Warren Buffett isn't buying anything yet. Are you?
No, I'm just watching what's going on, and not much is going on.
What do you see?
I don't know the answer yet, Eric. All I know is that despite the fact that we've been in lockdown for 6 or 7 weeks, there's very little activity, very little transactional activity, very little opportunity to do anything. I think everybody is in kind of a, deer in the headlights kind of stature at the moment. And at least, so far, just sitting here watching and we're not seeing anything happening.
Sam, why do you think that is? Is it because prices aren't low enough yet?
Oh, I think that rather than referring to it as prices aren't low enough, I think that there's been very little opportunity at price discovery. My guess is that those sellers that wanted to sell still remember the prices that were available 7 or 8 weeks ago. The buyers are looking at a very different world and expecting to see significant discounts from where we were 7 weeks ago. And when you got that big a spread, nothing happens. And I think that's an accurate description.
What about you? What do you need to see before you feel motivated, inclined, even excited about putting capital to work?
Well, I think we're all faced with an extraordinary level of uncertainty. Uncertainty on how the reopening will go. Uncertain as to when the reopening will happen. Uncertain about how people will respond. How soon will anybody get on an airplane? How soon will anybody stay at a hotel? How soon will anybody go to a mall? The fact that these places may be open doesn't necessarily mean that they'll be doing business. And so I think with that level of uncertainty, rather than people taking action, I think everybody is sitting on the sidelines waiting for more clarification.
Sam, you've been through a few cycles. Every cycle ends with a crisis of sorts and then questions, uncertainty. How does this level of uncertainty compare with past cycles?
Oh, I don't think there's any comparison. Past cycles have all been financial. Whether it was the Great Recession, of 07, 08, and 09. The question was, when do we, get financial recovery? You go back into 73, 74, 81, 90. They were all financial scenarios, overbuilding, other challenges. But this is a challenge that we have no frame of reference for, number one. Number two, the scale of it is just enormous. I don't think we've ever, even during the Great Recession of 2007, 8, and 9, there were parts of the world that were doing fine and other parts of the world that were suffering. Certainly, a number of the emerging markets came through that whole period very strongly. I think in this particular environment that we're in right now, the problem is universal. And we just don't have any frame of reference. We don't have any history that we can go back to and say, aha, well, this is the way it'll be. And where, in effect, somebody can take a position one way or the other as to which way it'll be.
People are taking that position amazingly every day. There may not be enough price discovery for the kinds of investments you want to make, but there's still plenty of liquidity in public markets. Sam, given what you just described, the world being in uncharted territory, I'll paraphrase for you, no frame of reference, as you said, do public market valuations make sense to you?
Well, I'm not sure that public market valuations actually reflect the reality of what's going on. I think that the public, markets have historically been a reflection on the expectations of the future. So we have a lot of people betting one way or the other on the future. They're also betting generally from a diminished perspective. So the market went down 25 or 30%. It's come back maybe half of that. But I just don't think that anybody has any certainty. And that's why we're seeing such incredible volatility. I mean, we've seen volatility that we've never seen before. We've seen 1,000 points in the Dow in one day, backward and, up 500, down 500. We don't have any reference, we don't have any frame of reference for that kind of volatility. And so as a result, it's like a little bit like the game, musical chairs. Everybody in the market knows that that the music is playing, and while the music is playing, they got to walk around. But they also know that there's going to be one less chair when the music stops, and therefore their focus is all on, how do I make sure I get one of those chairs? I don't think that's so dissimilar from where I think people who are involved in the market are actually, making decisions.
So even though the future is as unpredictable as it's ever been before, Sam, every investor has to tilt one way or the other, tilt optimistic, tilt pessimistic, tilt bullish, tilt bearish. You have to have a view of sorts on how long the pandemic lasts, on how it changes human behavior, right?
Do you really? In other words, I'm not sure I accept the premise that you're putting out.
Okay.
Matter of fact, I think that what we're seeing right now is the fact that nobody is doing anything. Nobody is taking a view. That's why there are no transactions. I mean, you can't confuse the stock market, which is a flow back and forth of thousands or millions of people's betting to what's going on in the real world. In the real world, transactions aren't getting done. In the real world, transactions are getting called off. In the real world, people are saying, I don't know. So therefore, I'm not going to do this. And so I think that, I don't think everybody has to make a bet. And I think a lot of people are not making bets. And that's, of course, contributing to the uncertainty that I described.
Sam, do you think we'll get back to what people would call normal life? And if not, what kinds of changes do you think we'll see in habits, in consumer behavior, for example?
Well, I think that in the near term, and I think I'd probably define the near term as the next 2 to 4 years, I think we'll all see a lot of changes. I think that, the way office spaces are laid out with people currently, sitting on top of each other, I don't think that's likely to keep going. I think that we're likely to see events, social events, whether it be baseball games or football games or dances or whatever. I think we're going to see, more social distancing than we've, been accustomed to. I think if we end up with a period of time, where people gain confidence that we've quote unquote beat the deal, then I think we'll slowly start, to recreate the life that we previously had. But I don't see any scenario where, come Monday morning, everybody's going to go back to where they were before. I think that, this has been an extraordinary shock to our culture and shock to our system and shock to the world. And the world is is trying to figure out what to do, and I don't think anybody really knows yet.
Sam, how does an economy function? How does a society, for that matter, function? On the basis of what you just described, if we're potentially living with social distancing for years, and the open plan offices that we've gotten used to are a thing of the past, and baseball games, as you say, are a thing of the past, and going to the bar is a thing of the past, and convenience, easy, cheap access to everything from food to travel, kind of goes out the window, at least under the scenario that you've painted. How do things work? How does anybody pay for that?
Well, first of all, I think you're taking what I've said and expanding it a little beyond what I said.
I might have done that. That's true.
You went, from one end to the other, and all I'm saying is that everybody's activities going forward will be affected by what we've all been through. So maybe if a restaurant has 150 seats, as approved by the health department, maybe it opens at 25%, and then it goes to 30, and then it goes to 40, and over a period of time, eventually gets back to 100. In the same manner, I think it's likely that in sporting events, we'll start out with less density than we previously had before. I think we'll start out with less density in the bars than we had before. And then slowly, as people's confidence grows, so too will we move more toward wherever we were before.
So in a number of cases that you've just cited, those business models survived on volume and thin margins. What business models aren't viable any longer in a world where we still have to be, if not 6 feet apart, a few feet apart?
Well, I don't know. I mean, I imagine there are lots of them, but let's take one as simple as airlines. The middle seat. How soon are you going to sit in the middle seat on an airplane? How many airlines, with the kind of pricing that we have in the airline business, will survive if they can't sell the middle seat? Ryanair, which is, I think, the largest discount airline in Europe, already announced that if the middle seat was no longer available, they couldn't survive economically. So I think that there's a lot of businesses where, we've democratized it to the point where, it's real density has been created, maybe more density than is good for us. And maybe we need to pay, 20% more for an airline ticket and not have middle seats, or whatever the scenario might be. But I think that it's those kinds of adjustments that are going to be part of the system and set the new tone.
When you think about those adjustments, let's talk about that a bit more. You have to think about those kinds of adjustments as a real estate investor, for example. Many of the properties in which you might invest have some of those businesses. And in fact, many of the properties in which you may be invested already have those businesses. So let's talk about that for a minute. Well,
I mean, we're one of the largest owners of multifamily housing in the country. Every one of our multifamily housing projects has, gyms and has social areas, and previously, there was no monitoring, there was no social distancing. Nobody even thought about that. Now, when we open the gyms again and when we open the social areas again, I don't exactly know how it'll be done, but there's no question in my mind that it will have a social distancing element built into it. And it'll take quite a bit of time before people's confidence grows, both from a landlord's point of view and from a tenant's point of view, to narrow that social distancing.
What are tenants doing so far? Rent was due on May 1st. How many paid? In other words, as of
first of all, April 1st, basically there was no difference in our rent collections than a year ago. In other words, as a percentage. As far as May 1st is concerned, we're currently running at a level that would suggest that we don't expect any significant changes in terms of the amount of rent collected. I mean, obviously, everybody's got different starting dates, so you don't, in effect, on the first of the month, either collect or not collect. But you have the basis of comparison to past months and past years, and so we kind of know how we're doing. And so far, I would say to you that we're collecting no different than we have at any other time.
That seems a bit remarkable to me, given that there are tens of millions of people who are already out of work?
Well, but I think, very much depends on who your tenant base is, how resilient they are, who they are. I mean, if I were a landlord to, let's, say a C grade multifamily project, I'd be a lot more concerned, and generally would expect that I would collect less, because in terms of those people who might lose their jobs, or become unemployed, etc., they're likely to be in lower quality projects than in higher quality projects. So I think that every situation is different. Now, that doesn't mean that we don't have situations that are affected by the virus and affected by the lockdown, and to the extent that we can offer help or offer some kind of an adjustment in timing or whatever, if people are really affected by this, we're landlords that take that into consideration.
Sam, your businesses span not just real estate, energy, logistics, transportation, infrastructure, healthcare, industrial services. We just talked about one slice of it. How's the rest of your portfolio holding up, and how are you running those companies?
Yeah, well, the answer to that question starts with every morning at 8:00. We all get together on a Zoom call, and those people in our shop whose job it is to oversee the different investments report in, and we talk about and bring everybody up to date. And in some cases, for example, we own and built a bridge that goes from Southern California into the Tijuana airport. It's been extraordinarily successful, and and as of we opened in December of 15, and we've been averaging close to 3 million people, and now business is down 90%. 90%. Now we'll survive, and hopefully business will return. But I can't tell you when, and I can't tell you at what rate it will survive. We also own a hospital chain. The hospital chain is located all over the country, and in a lot of places, the impact is almost unfelt, other than the fact that the government, either locally or at the state level, stopped us from doing elective surgery, which is a very high margin business for hospitals, and basically subsidizes a lot of the other parts of hospitals. On the other hand, we have one facility in New Jersey where it's wild. I mean, it's and by the way, I think the government, as it relates to hospitals, has done a great job of anticipating how to avoid liquidity crisis and how to, in effect, maintain that the hospital exists. So that's another side of the coin. Then we have various other kinds of businesses that have been, everything's been affected. Don't misunderstand me. But some places the effect has been pretty minor, and other places, like 90%, the effects have been binary. So it's all over the place.
Are any of your companies eligible for federal assistance, Sam? And if it were available, would you take it?
Well, the answer is that obviously hospital chains are very much beneficiaries of federal assistance. That's the only place that we've been involved with the federal government.
Sam, you've been warning for years about, well, you've been warning that there's been too much construction in U.S. real estate. There was a tsunami of oversupply. Here we are now. How do you think that's going to affect the market? Where are the winners and losers going to be sector by sector?
Well, I guess I'd start by identifying the obvious. I think probably the number one victim is going to be retail. And our retail was already feeling the effect of e-commerce. Now you've added e-commerce and density, and I think there's very little doubt that we already had a very significant oversupply in retail. So I would think that retail is probably going to take the biggest hit. The second biggest hit is going to be hospitality. Again, we built a lot of hotels in the last 5 years, and we were already beginning to see oversupply affecting RevPAR and affecting occupancy. Unquestionably, this is going to dramatically make things much worse, and I would not at all be surprised if just like we won't see a lot of retailers reopen, I don't think we'll see a lot of hotels. I think we'll see a lot of hotels that basically can't reopen. I mean, generally speaking, everybody has been focused on when is this, going to end. Nobody's really been focused on the question of what does it cost to reopen, and how well are we capable of undertaking that cost. And I think that's very much an unknown at the moment. Multifamily is probably doing the best, but manufactured housing is for sure doing terrific. Warehousing has been, the flavor of the month for the last 3 or 4 years. My own sense, and this is just my own sense at this point, is that an awful lot of warehousing has been built in anticipation of demand, and I think that this is certainly going to reduce the demand element. So I would think that the warehousing space is likely to be oversupplied, nothing like hotels or retail. So that kind of gives you a flavor of what I think. I mean, I think that the single family house rental business that has been extraordinarily strong and led to the creation of a bunch of public companies, I think is also likely to be affected, because whereas in an average EQR apartment complex we have 300 units, in a single family house you have 1 unit, and if that one tenant loses his job, you could end up with a significant vacancy factor in that arena.
Sam, if we take retail and hospitality for a moment, the malls that aren't going to reopen, the hotels that can't reopen, or at least can't reopen at a cost basis that makes economic sense, is there value left to those assets, or do they become what the residential blocks in Detroit and Cleveland became after the financial crisis?
That's a very, very good question, Erik. I don't think anybody knows the answer to that question. In all the discussions long before the virus about retail, the argument was, well, e-commerce is going to take a lot out of the retail space, but after all, retail always, in effect, had the best corners. Well, the best corners are defined as where the traffic is. But if the overall level of traffic diminishes, then the definition of best corners doesn't sound quite the same way. And so it would seem to me that we're going to end up with a lot of retail space that's just, I hate to use the word, falling apart, but pretty close to that. And it's going to take a long time. I mean, I used to talk about when they overbuilt all the strip centers, and I used to say that we're going to run out of churches to fill the big boxes that are empty, because a lot of churches ended up taking advantage of that and taking advantage of that space. But there's more of that space out there than there are new churches to get created.
Sam, big cities like Chicago and New York were the big winners after the financial crisis. What happens to cities after this crisis?
Well, I believe that. I mean, I've heard a lot of conversation about, people, wanting to move out of Manhattan and wanting to move, out of other major cities, and the major cities were far too dense. And I think, number one, generally speaking, I don't believe it. But more specifically, I think that if you look at who's moving into those cities, what generated the benefit that they outperformed since the Great Recession, I think the answer is that, these are all young college graduates, creating and taking new jobs. And, the biggest single tenants in the country today, and are no longer the law firms or the insurance companies, it's the tech firms. And they're, they are generally hiring people that are young, and frankly, they're one of the problems with being young is you think you're invulnerable. And frankly, as far as the virus is concerned, the impact on young people has been much less than on old people. So I think that they will continue to move in and continue to, spike or add to the economics of the major cities. Maybe we won't have as many, families in the cities as we've had up until now. I think that's a real possibility. But generally speaking, the young people are and will continue to move to the cities.
Sam, mobile homes or manufactured housing, if you prefer, was the great opportunity you saw materialize out of the last crisis. Can you see yet what opportunity might materialize out of this crisis?
Well, as I look at, the last, first of all, definition of when was the last crisis. Certainly the mobile home park business and manufactured housing business has frankly done well since I got in it in the early 80s. It's done well for a very simple reason, and that is everything comes down to supply and demand. The supply of manufactured housing communities has not kept up with the population growth, mostly because of not in my backyard zoning. So the result is that although periodically the manufactured housing business has had soft spots, it's generally outperformed simply by virtue of the fact that there's been no ability to add supply. So to the extent that that's the case with them, if I look at the rest of the real estate arena, I think it's very early in this scenario to come up with any answers. I suspect that there's going to be ways in which we change how we live as a result of this experience, or certainly the people who are around right now. And I think it's very unclear as to how or in what way we'll allow ourselves to change. But there are going to be lots of changes. I mean, just think about the fact that, the majority of the people who are still, employed have been working at home or from home. It's hard for me to believe that experience is not going to impact how they work in the future. Now, I don't think everybody's going to go from working at the office to working at home, but boy, I think a lot of people are going to work from home on Friday. I think a lot of a lot of employers, having gotten this experience, are much more inclined to encourage that than they were in the past, when they were afraid that somebody would work at home and not be working. So I mean, that's just one example. I went out and got takeout food last night from a Michelin star restaurant. I've never gotten takeout food from a Michelin star restaurant before, but I don't think a Michelin star restaurant has ever provided takeout before. How is that going to change? Is that going to become part of their whole methodology? Are they going to reduce the number of seats in their restaurant and try and encourage more takeout business, et cetera, et cetera? So I think there's lots of things that are likely to change. I'm a long way from being convinced that I understand enough yet to reach any conclusions.
Sam, you have some investments in energy. What do you think happens to oil and gas?
Well, I think that, there's no question that there is a general trend toward hopefully, less carbon-based fuels. But whatever that may or may not be, it's a long way from now. I think that, the internal combustion car is not going away. It's still going to represent 95% of the cars being built. It will over time slow down, and we'll have more of other electric cars, etc. But to think that oil and gas are somehow or other going to, because we had a crash, are going to somehow or other disappear is very naive. We're going to keep, you asked me about coal. I'd say I think coal may be, within my lifetime, see, dramatic reductions in its usage. But I don't think that's true of oil and gas.
You've been party to a dispute, Sam, between Colony Capital and Approach Resources. You're on the Colony side. Does that get resolved? Would you be willing to participate in a deal if Approach were valued at a lower price?
I think the answer is I don't think that that's an appropriate question that I could answer at this stage of the game. We just have a deal that where we believe that we were given different set of facts than we thought we had. Happens all the time. It'll ultimately get resolved.
Howard Marks wrote something very provocative the other day. You may have seen it. He said, capitalism without bankruptcy is like Catholicism without hell. We've seen $4 trillion of liquidity injected by the Federal Reserve, $3 trillion of stimulus from the government. Sam, is the government crowding out private capital?
I don't think so. I think that that $6 or $7 trillion you're talking about, I think was very, very effective and very well done, and very much oriented toward what I would call stopgap measures. But all of us need to be really realistic of the fact that this is probably 60 to 90 days of assistance. So, in perpetuating that assistance at these rates is just not realistic at all. And so I think that the government has stepped in and during a period of lockdown has created liquidity very much needed in various different places. But the U.S. economy and the world economy has got to take on the responsibility. There's no way that the governments can do this on an ongoing basis. It's very much of a stopgap measure.
Do you think the U.S. is still the best place to invest if you can do it at the right price?
I think that the U.S. is still the home of the rule of law. And no country in the world, in my opinion, has as clear a rule of law as what we have in the United States. And as an investor who's invested all over the world, I can tell you that nothing gives you more confidence than a consistent rule of law and a consistent environment for that.
When you earned your nickname, Sam, the Grave Dancer, there was almost no one who specialized in distressed investing. Now there are multi-billion-dollar distressed funds. Everybody wants to be a grave dancer. New ones are being announced every day. How does that change the way you think?
Well, I mean, it's no different than, in the early 60s, I was one of the first, multi-state investors in apartments. And I mean, think about the fact that when I first began, half the insurance companies in the United States would not lend on apartments because apartments were too risky. I mean, just crazy, but that's what it was. And then eventually, living, multifamily housing today is considered to be the safest form of investment. There's no question that I agree with what Howard Marks said, by the way. And I think that, bankruptcies are what you need to clear markets and what you need to end recessions and dips. And you need the ability to clear the market. And so as far as I'm concerned, I think that, the fact that there's a lot more distressed players today will help clear the market. But it also means that there aren't anywhere near as many opportunities as there were in the past.
Sam, what do you think is the greatest misconception many people are under right now as they look into this uncertain future?
I think that too many people are anticipating a kind of V-like recovery, we've been through this terrible period. The period's going to end. The virus numbers are going to go down and the world is going to go back to normal. I think that all of us who have been living, in isolated form, one form or another. I mean, I haven't shaken hands with anybody in 8 weeks. I have no frame of reference for that. And it's never been the case before. We've seen our whole lives changed. And I think your ability or your likelihood of forgetting that is going to take a long time. I mean, Santayana, who was a famous, Spanish philosopher, said, "He who fails to learn from history is condemned to repeat it." And I think we have a lot of history that we're going to be learning about and remembering, and it's going to affect how everything we do. And that's why, your opening question to me, I answered you by saying I think it's going to take quite a while. And that it's not going to be easy to, quote, return back to where we were.
Sam, my grandparents were permanently scarred by their experience in the Great Depression. You're old enough
You bet.
to have known a lot about that generation. Do you think this is going to be something like that?
Yep. Oh, yeah. As a matter of fact, it's really funny that you should say that, because the way I've described it to people is I've said, I grew up and I was in high school in the 50s. And even in the 50s, which was 20 years after the end of World War II or 25 years after the Depression, there were still parents of friends of mine who talked about the Depression and talked about the impact on their family, and permanently scarred is exactly the right word. And I think there's very little doubt that we're all going to be permanently scarred by having lived through this pandemic.
Sam, on that optimistic note, I'm going to thank you very much for joining me today. Great speaking with you.
It's always a pleasure, Erik. Thank you.